So sent out the excuse me, daily bias post. I'm looking for the CPI buy side, and then we have another gap above that, but looks pretty solid for so far. Tap into the bisi. I told you want to see that order block hold, as well as this order block down here. Now we fly up to the buy side. I am a little hesitant of reaching into further upside movement, like further buy side, just because we have this gap here we're trading into. We have this gap here, and if you look at the daily, also tapping into a fair value up here that's just been wicked in multiple times. Now, I don't know if this will clear it and continue all the way up to the buy side, but we have to be careful in the morning session, especially with the large overnight move like we saw here. This sometimes just can create low probability AM sessions, which so far, like if you look between 8:30 and now, there's not really been a whole lot of movement. It's just kind of been staggering back and forth, waiting for the volatility at 9:30. But no Judah swing here from Asian. Preferably you see London low dip lower. But from London, expansion up 170. So good to keep that in mind as we're looking at price this morning. But so far, dipped into the bisi with the order block in here. If you look at the 3 minutes, pretty clean. Order block range, close above it again, and then we have a fair value up right at it. So this order block, don't really know why this is lagging. This order block perfectly respected with that candle body. Saw the 1 minute there as we retraced into discount of the current daily range. Right, candle body respecting premium there too. Fly off of it. Would like to see the same reaction. I don't really like it popping up multiple different times like this. High resistance liquidity run, but if you look over at the hourly too, all these relative equal highs are all because we're trading into this gap right here, which you can actually trim to here. But if you extend that out, you can see all those wicks, tap, tap, failed it, tap. That's why we're kind of slowing down here. But no news at 10 a.m. If we had news at 10 a.m., that would have been perfect to look for further upside, but unfortunately we don't. Tomorrow we do have 10 a.m. news. So the only problem with 8:30 news is that it kind of creates these morning sessions where we're not really looking at everything. We can only look at a couple macros. 850 macro, not the cleanest either. We'll have to see what 950 macro brings. But best case scenario, we do have a lot of sell side built up, right? Obviously the session on the ranges, Asian, London. I don't know if we'll get all the way down there today, but relative equal lows here at 845. And then I'm sure 15-minute gaps all the way down. Yep, see, all in here. So something to watch out for. I'm not going to be, I don't really like using 930 as an entry point just because it's very volatile for sure. And sometimes you can get wicked out of your position before it flies up. So obviously if we're looking at a 930 continuation from where 830 was, then I would say wait a couple minutes maybe, just so you don't get wicked out, or even a couple seconds, so that first Judah swing maybe comes in and takes out sell stops, dips into a fair value gap, something like that, and then we fly up. Like even yesterday we saw that larger wick filling gaps, and then it comes all the way back down. But gap here holding, now preferably once we climb and close above this range, we just see it all the way, pop all the way up. So that's a propulsion block right there. Technically this is as well. If you go to the 3 minute, we just didn't close above it on the, yeah, see. So previous order block range and another order block range that taps into or approaches another one. Once we close above that range, you don't want to see mean threshold. So 50% of that second order block hit. So if we were to climb and close above this one right here, this 936 3-minute candle, close above it, and then tap back into it, you don't really want to see wicks either cross 50%. So those are pretty strong when you're looking at when price wants to expand. Like if you look at the 15-minute chart, this applies pretty fractally. Like here's one down closing range in here, trades up all the way through, confirms the order block, and then another order block range in here that was not approached by mean threshold. Oops. Leaves a breakaway gap too, right? Then it kind of resets the counter. So this would be 1, 2, 1, 2. That's kind of what I look for. But one of the rare order blocks to do for him. I don't really look at mitigation blocks, rejection blocks all that much. The only two ones that I've reliably used in tape reading is breakers and propulsion blocks. So if you're wondering, I feel like mitigation ones are probably the least important. Rejection blocks are somewhat important if you're looking for buy side and sell side liquidity pools where price can potentially bounce off of if there's a larger wick, like we saw in CPI. I'm not going to scroll back, but scroll back to your previous CPI, you'll see like this larger wick bounce off rejection block multiple different times. But if you continue to see this price action here, then watch for a Judas swing potentially at 10. It's not really enough data at all in this first kind of 15 minutes here to look for any entry. First 10 minutes of the macro. Morning. Haven't missed much. I'm just trading to this gap. To take out this buy side, it looks similar to a CISC. Do have this up closing range in here. Tapped into multiple times. I do want to see how this candle right here holds. But obviously sell side down here. Look at the 15-minute chart. Basically the most obvious one. You expect a macro reversal because of this case consolidation prior to 9:30. It's possible. That's how I'm watching it. Just because we also have this larger gap on the hourly and the daily that I don't know if we're gonna fly all the way through without some resistance. So if we were to climb up here, right at 10, we could see a reversal here. I'm not saying it's 100% sure. I'm not sure either way. It looks very sloppy, and when we have large expansions on the upside or downside prior to 8:30 or prior to 9:30, you can expect this kind of price action. So if you have a low probability kind of checklist, make sure you add that because that's very important. I would say normally wait for silver bullet hour. So wait for that first opening range to clear up so you can get kind of trading in here, especially after 8:30 or after 8:30 news is going to be a little rough. But say we didn't have this news, 9:30 was the true open. You've got to be very careful of a Judas swing, especially when there's a lot of consolidation that happens before it. So let's take a look at the DXY. So Dixie basically doing the same exact thing up here. Why I'm dropping off. All the indices are misaligned for the most part. ES looks bearish. Why I'm definitely bearish. Bullish on NQ. Bullish on, like, these two look the same. Basically trading up all the way since 130. Not a good sign. So we'll just wait. Probably if 950 macro doesn't give anything, I will actually look for 1030 just because I don't want to see no movement at all within that, the rest of the AM session. 1050 most likely will cause a reversal if we're not already reversing. So another tip is when we're on consolidations like this, consolidation phases, don't look at the 1 minute. Okay, so if you can switch to something like a 3 minute, 4 minute, 5 minute, very clear that there's no entry, right? Like it's up and down, up and down, up and down. On the 1 minute, sometimes you can get faked out. It takes a lot of discipline and patience, especially when you're new to looking at the 1 minute chart, to not get faked out by every move, right? You could see that as a change in state. You could see all these different candles that are printing. Oh, here's a buy, here's a sell, here's a buy, here's a sell. Just wait. If you want, go to the 3 minute. Normally what I do is I just go to the 3 minute, mark out that consolidation low and high, wait for either 2 candles to print past the high. That's kind of my rule, I think. If we have clear displacement, like if this is a low, we have clear displacement breaking past that, another clear displacement breaking past that, I would assume we're not in the Judah swing anymore. If we have one candle that came and swept us out, kind of like this, I would be careful, just kind of careful. Watch this order block. We're going to watch how that respects it in case that's a Judah swing lower. So when we're in consolidation periods, that's kind of the rule of thumb. Obviously, there's going to be high volatility places like this where we have form a Judah swing and then come back lower. But 1 minute consolidation, most times you can be trusted as long as the displacement is there. So see, you didn't get a second candle that closed bearishly all the way through the gap. I still think this daily CPI will be hit. So watch how this order block range is held. Obviously, if we close above it, I don't know, did we take this out? Took it out by a tick. So that's enough of a sweep where we can actually trade back up now. Now, if anyone trades multiple accounts, I mentioned Apex yesterday. It's running their sale, 80% off, or I think it's 80% off. But I found yesterday, somehow I found a free trade copier. It's just a NinjaTrader script. If you use NinjaTrader specifically, free trade copier, and it's pretty basic to use, runs smoothly. The only problem that I've seen with it so far is it doesn't allow you to take partials, but you can scale up, scale down. So if you have 2 accounts, say you want one that has 2 micros, sorry, 2 minis, and then the other one trades 1 mini, or say one you want to trade pretty aggressively, you have 1 mini on one, and then 5 micros on the other. It'll execute it both at the same price, same time, take profit, stop loss, all those work. The only problem is the partials, which is kind of frustrating, especially when you have multiple contracts on. It works for NinjaTrader, but it's a free version. It's like the Apex one, yeah. I haven't actually used the. So by the way, we're holding this order block, so look for potential sell side. I just don't like it now because of this gap. I haven't used their Apex one. It's like $150, so I just didn't feel like buying it. But I'm working with the guys who created it. I sent them a DM. I was like, yo, can I work with you guys, see if I can make a video explaining it all? How to download it, how to use it, all this stuff. Because they don't really have a YouTube video. It's not even all that popular. I only saw about 1,000 downloads on the NinjaTrader kind of forum. So hopefully, the guy who made it is currently on vacation. So hopefully in the next week or so, I'll get his approval and then I'll publish that video on YouTube. Maybe like a 20-minute video or something, how to download it, use it, if that's something you're interested in. But I think it's pretty cool. Don't gotta waste $150. So I'm still kind of sketched out going for short, or going short here. Although it is good. 30 points lower. Oh, Quantower is built-in trade copier. Nice. Oh, I was just talking about a trade copier here. Let me see if I can find the link. Or someone remind me at the end of the stream. I'll do that. Someone remind me at the end of the stream and then I'll send the website link and then you can look at it and download it for yourself. I won't send the zip file in here, but you can take a look at the end. So watch this up closing candle here too. Yeah, I would use Quantower. I'm used to NinjaTrader. So, and I don't know if, does Quantower have any fees or anything like that? Yes. Oh, someone knows what I'm talking about. ADTS. I believe that's what it's called, right? All right, we're respecting this order block here. So maybe create some high resistance, but I would like it to look for sell side targets. Don't like my experience with Quant Tower. Sometimes candle disappear for no reason. Yeah, I personally have never used it. Seen some people use it when you link it with Top Step, but nothing with Rhythmic or anything like that. Why is this bisi not to see a support you short in? I'm watching both sides. Like it's not clear. We are respecting some bearish PD arrays, but obviously now we're holding this. I don't want it long just because we're bouncing off of it, because I don't know if it's going to trade all the way through. It's very unclear for me, especially with this kind of macro signature where we have parent in the range and we're tracing all the way to discount again. Most likely that's not a high probability setup. I see it now, we're trading all the way through, so it becomes difficult to read. If we do form a breakaway gap on top of this old buying, old selling, that would be nice. Pretty efficient delivery all through here too. So watch. It's just back and forth. We're still basically in the consolidation here. Old buying level. Probably if you do want to see it used as old buying, we see a closure above it. Same thing with this up closing region here, so that's nice. We're watching to see if this wants to be used as breakaway gap. Do you make such live streams on daily biases to New York Open? I do have an old video on daily bias. I'll probably make a new one just based on London session and New York Open. They usually take 930 if there's some sort of strong drawn liquidity. I don't really like trading 930, even if it's a 830 news. We're not expecting 930 Judas. I might take it on demo just to practice, but it's not something I feel comfortable yet. I know people have talked about a macro between 920 and 940. Personally, I just have not seen any reason to use that volatility. I feel comfortable with 10 a.m. volatility. Even 8:30 sometimes is a little bit clearer, but no. Only direct volatility I'll trade is 10 a.m. So we get nice candle closures up here, breakaway gap. I don't really like it being filled all the way down. Oh, daily basis, yes. Yep. Live streams are basically daily. I post all the old ones on YouTube as unlisted videos. So if you want the links to those, they should be in hashtag YouTube vids if you're looking at the channel. This one right here. But still nothing clear. Like 10 a.m., I guess this is your retracement at 10, right? Let's send screenshots of this really quickly to predictions chat. For 10 a.m. retracement. Still very hard to see, I think. Let's actually look at that hourly gap above. Or it's at least this area. Oh, but there's probably a substantial opening range gap too. I didn't even mention that. Yeah, look at that. So we got to be careful here. 134 points. I doubt that would be left open for the rest of the week, or even going to the into the next week early on. I'm sure we'll probably trade back down and close that. So that's all you got to be careful when we trade up to here. I would like to see it trade up, but it's just not the cleanest price action. Like we got a retracement here at 959. Order block that's forming on top of it. Like preferably we would see that bounce right out here. See how we're trading all the way back down. Yeah. Largest range expansion. I agree. I mean, I would like to see it at least pop and take this. Once we pop and take this, this kind of price action is fine. But for it to be delayed this close to the buy side is just frustrating. Fell all the way through the breakaway. And trading back down. It's not respecting bullish or bearish PD race. So I took a little demo along the other screen. I'll send the picture to predictions chat. You can see it's all the trading lower. Really no entry there to the downside. But if you want to take a look, there's the futures trades. Long, basically off the order block, old buying, and then I entered another position once we traded up again. Then I just rejected off of nothing there. Very, very poor day. Can't wait till February, man. This price action is actually good. So opening range gap, most times you want to mark out 50% of these. So I'll mark out the open, high, low, close. Pretty far down. Do have sell side down here, but like this kind of day, it's going to be difficult. It's also going to be difficult to manage yourself. So take some losses, 1 or 2 losses. Don't try and, that should be telltale that we're in low probability. So don't try and force something, right? Like you want to only be forcing things, not even forcing things. You don't want to be forcing things. You only want to be taking trades when it's high probability setups. But like I took that loss here, but it's very clear we're in low probability. Like we've been stuck in this range since 8:30, 70-point range since like this looks like a London session or even an Asian session. So sometimes it's going to be hard. Like, you know, depicting when it's going to be low probability. Sometimes you're going to be taking a trade when it looks high probability and then it comes stops you outright. But it takes a lot of discipline for yourself to, you know, to stop, which is, I think it's good if you have everyone should have a max like setups they're looking for a day, whether that's 1, 2, 3. I would say even 3 is too much. 2 is probably the optimal one for a lot of people, right? If you take 1 loss, maybe it's a small loss. All right, we can look at one other trade setup throughout the day, whether that's the AM session or PM session. Take that as a loss for sure. You're done, right? Maybe it's just 1. Maybe you notice that as soon as you take 1 loss, you think emotionally, can't manage your trades. You start just over leveraging, over positioning, and that's it. And that's fine, right? Like we have such a, like on a weekly basis, think about how many setups you get. If you're just looking at macros or if you're just looking at the AM session, there's plenty of setups. And there's at least one that could probably net you at least 40 points, something like that. So if you don't get a setup on a day, you should feel 1, comfortable not taking anything. And then 2, if you take 2 losses, like you have to trade for the next day. right? Like the main goal is to survive. So if you're trying to over trade on one day, when it's low probability, like we're taking this as a short, like although this may be a good short to sell side, we don't know if it's going to do the same exact thing or it's just going to bounce now after we fill this gap to that sell side, right? So it's like all the algorithmic signatures in here are gone. Not gone, but very, very difficult to read, especially on the 1 minute. Like if you plot to a 5, I mean, yeah, you have a breaker in here. Could use that, right? Entire range is your breaker. I guess you could use this last down close candle. That's your breaker. Turning them to a bisi. That's also why having a model is important, right? If you don't have a model, you're just trying to trade something like the AM session. You're like, all right, I'm just going to look at a setup between 9:30 and 11. I'm just going to find a setup. A lot of times it's going to be very difficult to stay well managed because, okay, I can take a trade at 9:30. I can trade at 10. I can trade during silver bullet hour. I can trade at all those different things, right? How'd you get the gap? Just showed. If you go down here at the bottom right, if you can see it on my screen, there's a thing called ETH. I'm also on NQH 2024, by the way. But if you click on this and then go to regular trading hours, it'll show you the settlement close till New York open. So all the overnight trading is done. You can see these large gaps that form in price. Similar to what you see on like something like an SPY or a QQQ. All those ETFs will show these gaps in price. Like here's another large gap. Now, a lot of times those gaps want to be filled either throughout the day or throughout the week. So it's good to have them marked up on your chart, especially when you have, it's called consequent encroachment, but 50% of that gap you should also have marked. It's a large liquidity void for retail traders. BPR in here as well. Anyone else's trading view lagging? Like if I keep trying clicking on this tool, it just doesn't work. Yeah, you may have to go on futures. If you can't switch from ETH, yeah, most likely have to switch from futures or switch to futures. Sorry. So the reason I marked out this X line here is if you look at strictly just this gap in here, this bisi that I've marked, wicks down, selling, right? So selling, selling, clear selling all the way through the gap. There's this tiny portion in here that doesn't have buying left, right? So we trade into, like if we trim it here, technically to here, but if you want to go on the wicks, came all the way up, filled this gap as well, but traded up into the area that needed more buying. So now it's efficiently filled. Now if we trade back below this order block, I'd like to see is respected as a bearish order block, and then we can trade through here, no gaps after that, run into the sell side. Obviously that's a high probability kind of setup or high probability session. You'd be looking for that signatures. We'll have to see if we get it here. Another macro time too. Or trace from the premium right at on 10 a.m. just saying. Up here. I'm not sure. I don't think there's really a clean setup from 10 a.m. unless there's something on ES we're missing. Yeah, ES still wonky. See what DXY is doing. Need DXY to start climbing up here. If we can start climbing up, reach for AM high potentially. Should see that movement we're looking for. Buy side up here. Go back to NQ. And trading all the way up. Here's your old selling level. So I guess we'll screenshot this macro. A couple minutes here. Add it to the macro view because this is something you want to study. We do have the power of 3 in here, but I mean, this kind of retracement leg, you do want to see a gap that forms. All right, we don't have any single gap in here. I guess we do have a liquidity run at 940, 940-ish, low risk entry at 950, but we don't really have that off the order block. Still trying to see what we retraced on at 10 a.m. Yes, nothing there. Watch the SMT. This low, this low. Right. YM, nothing much. DXY. All over the place this morning. ES left equal lows. Yeah, ES left equal lows. NQ left equal highs. ES also has some relative equal highs too. I'm actually curious. Do we have a new week opening gap we traded into? Oh, never mind. It's lower. Let's go to the 5-minute. Pretty clear consolidation here too. But if anyone took any profitable setups in there, I'd be very curious to see. Like if this morning if someone posts, I'll text some of the other guys, Market Maker Turbo, see if he took anything. I'd be surprised. Probably have to wait for PM session. Is left equal highs, so you would watch that inversion on NQ. I would be watching, talking about this one right here. Like, see, I keep clicking it. There we go. This one in here. Now, preferably, so when you want to see inversions used, preferably you do want to see an order block range left at the top end. This order block here would be your last line of defense, right? We have inversion gap, gap in here, order block with the fair value gap. So that it should not really close below this 1009 candle if we want to expand upwards. Actually, wait. All right. While we're waiting, let me pull up the NinjaTrader copier if people are interested. Oh, I got the link right here. All right. So this is the first version. If you want to download it. Obviously, I'm not affiliated with them, so be careful downloading random stuff off the internet. But if you go there, they also have a Discord. So if you want the second version that has like the option to reduce contracts based on your account size, then go to their Discord. Then go to, I think the channel is Trade Copy, ADTS Trade Copier 2 is the channel. So those are kind of directions, but I'll try to make that video. if I get their approval sometime this week. So I guess we'll wait for 10:30. If there's really nothing happening at 10:30, then we'll just call it there. I'm tempted to just call it here because this is just a mess. Really nothing in here. Both sell side and buy side building up. Yes. Like this. All right. So when you see pre-market, if you see a lot of these wicks and volume balance that forms prior to the 9:30, even prior to 8:30, ES is a little bit easier to spot when it's going to be low probability. If you look at all these wicks back and forth and all the volume balances that are forming, then if you look at yesterday's price action, there's less volume balances and it's just kind of, it looks a little bit cleaner. Now, actually, I don't really know. You'll see it when it's very obvious, like when it's just printing normally. This all looks a little choppy to me. Like, see how there's less wicks back and forth on every single candle. Nice down displacement candles on some of these. But if you, in February, you'll see it's going to be very, very clean. Do also want to watch out for the quarterly shift that happens between March and April. That's coming up in a couple months. But if you're looking for, by the way, we're using this inversion now. And we do have an order back that formed at the top end. That's what you wanted to see. So this here, if we close above it, should be retested and held. Efficient delivery all in here too. So maybe we don't even get a retracement. Could just see speed all the way up. So we didn't trade below here, right? Held that inversion, formed the order block. That's your, this right here would be a high probability setup if it aligned with time. Good. 30 points away. Yeah. Outside of macro time window, but could use it maybe a silver bullet. I would say if you're looking at, excuse me, looking at trading silver bullet, very difficult to do on the 1 minute starting off. I would say 3 minute is probably the one to look for. 3 minute typically has decent entries. And it kind of condenses that window down into what, 20 candles. So if you don't see a clear setup, clear draw on liquidity in those 20 candles, there's not going to be a large move we probably want to participate in. So watch this gap that just formed on top of the order block too. That's 3 PD arrays, right? Inversion, order block, and the bisi here. So there's the top. I'm tempted to go long, but we'll just wait. Flux, why did you not take the sell at the close of the 1001 candle below the BSFBG? Close of the one, wait. So the close of this 1 minute. Oh, below this 956 FPG. This one right here. Probably because we were still in consolidation. I also went long. Like if you look at the future trades execution, I went long. After we saw the respect of this old buying over here, we saw the sell side sweep, dipped into it for value gap, change the state. So I felt that was a decent long. So this candle I think actually stopped me out. But looking as a sell here, just off of momentum, I don't really like that too much. Like there's not really a whole lot in here, right? Like we could just be trading into the order block. We could see it just bounce off since we may just be clearing this entire fair value gap with selling. Maybe this wick, but it's such, you can see it's such a quick candle where if you saw it trade into the gap, wick lower, and then close like right here, and then maybe we wicked again into it, tapped it, and we started to move away, that maybe would be a short. I wouldn't just short right off this 1001 candle closing below this gap. I said I was going to go long here, but look how it's because of this. Like, we're just bouncing back and forth, not respecting the PD raise. Like here, if you look at this, order block, breakaway gap, forms another gap on top of the inversion gap, trades into it, and then this order block that trades into the gap is high probability. If I took a stab long there, definitely would have been stopped out as we trade all the way down. Like if you look at previous days, all your inversion gaps that form like that are mostly high probability. We go back, let's see. Here's an inversion gap, right? We got buy side as a drawn liquidity. Gap right here. Extend this out. You see those order blocks that are formed on top. I want to see if I can find a clear one. Here's a clear one. This one from yesterday. Inversion fair value gap, we closed all the way through. Confirm that order block range right up here. It's the one I marked out. Extend that out. Tapped into it. Barely tapping into this bisi as well. So that's what you want to see, right? I'm not just making this stuff up. This is a high probability setup, but we're also within time, right? Within the time window there, it's a nice long. Targeted maybe the buy side up here. Obviously, we missed it, but plenty more than the minimum, 70 points up. That would be like, all right, that's a solid long. But then if you look at today, we are doing nothing high probability. Up, down, misses the buy side from last week by 2 points, trades all the way lower. Fails the buy side push again, trades back down, fails the sell side push here, fails another high probability buy side push, comes back down into discount, way further into discount you'd like to see right here. We already dipped into discount. Why do we need to come all the way down? Trade all the way back up into here, into a BPR. Like, there's so many on low probability days. It's kind of weird. On low probability days, you'll get more entries or looks like entries than a high probability day, right? High probability day, it'll be clear. All right, here's a buy side sweep between 9:30 and 10. We see a market structure shift. Here's a fair value gap. Clear entry. One entry, maybe two entries if you get a 10 a.m. retracement. And then boom, it flies all the way to the sell side. And then you're like, all right, 60 points, I'm done. Maybe you wait for another 30 minutes. All right, here's another trade setup. All right, we're done with that one too. Right? Like on a high probability day, you only see a couple entries, or maybe even see me only talk about a couple entries. If you go to the macro views and look at all those high probability screenshots or the YouTube vids, only talking about like one or two. Today, how many have I talked about? Right? 9:30 run up to here, failed. Tapped into here, failed. Trading that back lower. We got this respect to this CISD I talked about, failed. Another entry here, failed. Like, there's so many ones. That's why these low probability days are very hazardous when you're early on, or even as a seasoned ICT trader. You're going to get so many entries and you're not going to be able to stay, have the right state of mind. Because if you're trying to trade every single entry, you're going to slowly just build up that frustration. Boom, boom, boom. I'm going to increase my position size so I can make sure this one's right. And you're more worried about being right than you are about trading. That's another kind of hazardous fall, is if you're trading the money or if you're trading about being right. It doesn't matter if you're right. If you make the money, right, it doesn't matter. But yeah, be careful of these. If you see a whole lot of setups forming or a whole lot of entries forming that shouldn't form, low probability, right? That should be a signal going off in your brain. All right, we got to stay off this. But obviously that takes sometimes a lot of blown accounts to understand. Yeah, so just go back. If you want to study it, go back, look at the high probability days, or maybe the days you got nice winners. Look at how many entries form, high probability entries, and then look at the low probability days and look at how many potential entries you could see. Isn't failure not to sweep a reason to be bearish too? It is, for sure, especially since we're tapping into this gap here, right? Like this hourly gap I have marked out. We're also tapping into it. Did we tap into the daily? I think we tapped into the daily there too. Yep, wicked into it. Another reason to be bearish. So failure sweeps are bearish for sure. With failure sweeps, I don't really like counting that as a bearish movement. Like, obviously, I would prefer if this ran it out and we trade back lower. Then I'd be like, all right, we can for sure 100% look for sells. Not 100%, but you know what I mean. This kind of failure swing just to me looks like, all right, we're leaving liquidity so close to the actual buy side, right? So retail is going to really trust that as high resistance. Like, think about how much liquidity, if you look at the hourly chart, how much liquidity is resting here, right? Bounce, 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 bounce. Ideal condition, if you want ideal condition, yeah. We get 940 run up here, takes out CPI high, it's black line. Trades back lower with gaps. Trade into the gap at 950, displace lower. Maybe we bounce off this order block, or sorry, off this fair value gap here. Let me actually, we'll go to replay mode. Ideal condition, sweep this out. Right at 940. So I guess your B classification, if you're familiar with the PDF. Trades back lower with displacement. 950-ish runs in. You got to trade up right at 950, maybe into a CISD break or something like that, fair value gap. Trades back lower into this gap right here. Maybe with that gap lower, we form a displacement leg. 10 a.m. comes, retrace up at 10 a.m. right into the fair value gap, maybe into premium of this current daily range. And then boom, we get maybe acceleration here. Bouncing off this little fair value gap, we run all the way for sell side into further the opening range gap. That would be high probability, right? Like if we saw that classic 950 macro, 10 a.m. reversal basically, didn't get that. So like if you run it forward, be able to run that high. So then I'm thinking, okay, maybe we could run the buy side out again. Then we get a change in state, trade back lower, bounce off the gap again. Doesn't this look like a decent long? Or we took out buy side or took out sell stops, still have buy side remaining. Gap we just dipped into, another gap with the old selling in here, order block. Fails that. Comes up into the sibi, technically, looking for sell side. Fails that. Another gap. Fails that. So it's very, very terrible. Just terrible. Was looking for a reason to short because in premium, right? So after not sweeping and then closing through for value gap at tunnel on the reversal, I got in. I don't think that's bad. I think that's something I definitely would not have seen for sure. Would not have seen this as a trade to go short. Just because there's no really PD array we were tapping into premium. I don't like it just running into premium with nothing there. Like if this up closing range, these two up closing candles were shifted up to like here, right around here, right? And we tapped it like right up here. We wicked into it, and then we traded back lower. That would be like a great short. I don't like it just running up into here in a bunch of wicks and then trading lower. So yeah, if we trade into premium of that daily range into a PD array and then sold off, that'd be perfect. At least for me personally, that's what I would like to see. Like to me, that's just, it's still very 50-50. And if I can't identify a setup that there's more reason for it to run for sell side or more of a reason to run for buy side, like it's not obvious enough to me. And I feel like everyone should feel this confident. Like once you develop a model enough, right, where it doesn't seem obvious to you, especially when you've seen all the different variations of it, there should be no reason, there's no hesitation to not take a trade. Let's watch these order blocks too. Here's 1030, by the way. Now, preferably you're looking for 1030 to 11 to create that high of day on expansion. I'm not going to be taking this, but I guess order block range in here, pretty efficient delivery. We could just see, I've been saying we could just see speed, but every single time we get close to it, we just bounce off. So don't know. Apple, XLC, XLK consolidations near high of day. I haven't checked those in a while. Could be true. I don't really check sectors anymore. DXY starting to head lower. We got correlation between the assets as well, or between the indices as well. So 1030 may bring the final pump we need. See, we keep bouncing off that hourly gap. This hourly gap here is trimmed. Oops. If I go to the hourly chart, you can see it. It's trimmed here. I trimmed it to the wick, which technically you got to trim it to the body. I don't know why I did that. Right here. So the entire gap is from here to here. We got buying and selling basically up to here. So you can extend that out. And then if you go back to the 1 minute, see how many different times it's bouncing off that same exact price level. Here, here, here. So I guess maybe, yeah, if you're looking at this 10:01, 10 o'clock run into the discount into the 1 hour gap, maybe. But that's a heavy maybe. 15-minute chart looks very, very poor. We got a 1 hour order block there. Flip up the 1 hour chart right here. 8 a.m. candle. You can see every single time we run up here, bounced. So I'll send a screenshot. Let me actually send a screenshot of this macro to macro view. And then once the 1030 macro is finished, we'll send that one as well. Which is garbage day. Probably the worst day we've seen in 2 days. 2 weeks, sorry. Yeah, this is this is where retail would shine. The one day that we're not taking trades is the one day that retail is, I'm sure, is burning this up right now. We got the heavy support down here. We got the heavy resistance up here. You know, standard bouncing back and forth there. This is just a mess. I'm gonna throw up looking at this. Anyways, I don't really know what the heck's gonna go on during this macro. I preferably, best case scenario, we see a high day put in, sweeps out the buy side, maybe taps in premium out of this fair value gap, and then we trade back lower going into between 11 and 12. But there's nothing in here that's pointing to a high probability trade. We have no market maker model. We have no turtle soup. We have no really continuation. I'm seeing we didn't even get speed up here where there's a lot of efficient delivery. This 1 hour gap is got the strength of a horse. So, yeah. So if you want to, make sure to check out that Ninja Trader copier. We'll go ahead and end the stream here. So, as always, need any help, want any backtesting data, shoot me a DM. I'll be more than happy to help you. I'll try and get that New York AM PDF out by, we'll say, next Wednesday. Let me make sure I include everything in there, and I don't want to have multiple versions. But keep your heads up for that, and then make sure, yeah, you just stay safe the rest of the day, especially with this conditions. I would just say turn the screens off. There's nothing you're gonna miss. So until I see you guys tomorrow, Lord willing, have a great rest of your day. Stay safe and peace.